Welcome back. Well, let's focus on the fundamentals of the market. We have Rahul Arora of Nirmal Bang joining in to discuss a couple of stocks as well as market levels. Rahul, hi. Thanks very much for joining in. We've spoken about pharmaceuticals quite a bit. It's been a strong rally that we've seen since the past 2 weeks. Specifically, do you think that there's more to go from current levels? Because these stocks are still, say, on an average 15% away from their 52-week highs.
That's right, Ekta. I think the damage has been so much in terms of price erosion, and I don't mean in terms of the product price erosion, I mean in terms of the stock price erosion as well, because one references the other. My mind goes back to when we initiated on Dr. Reddy's. I mean, if you take my initiation price to where it is today, the call is still going wrong. So even though it's seen a bit of a rally, but I think, with the good news flow coming through on Sun Pharma, Dr. Reddy's over the last couple of days, Lupin has had a couple of launches. We recently met Cipla. They were actually quite hopeful on the launches. So I think, the entire sector pre this short-term rally you have seen was coming to you anywhere between 12 to 14, 15 times FY20 earnings, because people had built in a lot of the launches coming through in the second half of 19 and 20. So the EPS growth was very substantial, which got the price to earnings down. We're still believers in Dr. Reddy's. So even with this Suboxone approval, my analyst believes the other players in the fray will probably not launch, as you were just informing me that Mylan has got an approval. But even then, I think $80 million is what we're expecting in incremental earnings for Dr. Reddy's this year. Aurobindo is another interesting one that we like. I think if you see the number of drugs that are going off patent for Sandoz, I think the overlap it has with Aurobindo is quite substantial. I think that could be a very big beneficiary. And I think finally on the respiratory side, we got some comfort after meeting Cipla very recently that things might be in order. So I think it is not a bad idea to remain overweight on pharma because, the drug prices had come down to very abysmally low levels. In some cases, on some products, they were actually very close to the Jan Aushadhi prices. So when we speak to pharma players, they said that the downs... yes, absolutely. So, and we've actually put out a report to that effect. So they felt that, incrementally, the price erosion will not be much. So I think there is a process of bottom formation. It'll still test. I mean, I think people who would have bought after our initiation are still losing money. So I can't pick up the phone and tell someone, hey, Dr. Reddy's is rising. But I think if you are someone who's borne the brunt of it, don't sell these stocks now. I think it's just a process of bottom formation. I think leg 2 of Pharma 2.0 in India is probably just about starting, is my sense.
That's that kind of assumes that what we saw was essentially more cyclical rather than structural. Whereas there are those who very strongly believe that the US generic market as we know it is, basically toast. In terms of, there will be growth, but margins will continue to get depressed year after year after year. High single digits, 8-9%, depending on who you talk to. How do you take into account that with vis-a-vis stock prices? Well, there is under ownership and maybe attractiveness generally. You leave those characteristics aside, just growth, Rahul, for the sector, and how much more stocks can do from here.
So I think it's a very interesting point you raised, because the latter is a more of a technical issue in terms of ownership. But I think if you look at cyclical versus structural, I don't think at any point in time the US FDA has said that we don't want to do business with Indian generic manufacturers. If you look at...
No, the problem now seems to be quite the opposite. Now new rules say that they're going to clear products and approvals are going to come within 12 months.
There is a reason for that. And that is because $20 billion worth of generics go off patent in the United States by FY20. So unless you don't want those medicines available at a Walgreens or other outlets.
But it also means many more guys for the same product, right?
Which is why you need to find overlaps with companies that are in very similar product lines in the US, which is what I was referring to in the case of Sandoz and Aurobindo, and find those overlaps where those spaces will be vacated by the larger players like the Mylans and the activists of the world, and where Indian companies will come in and benefit. And I think the maximum overlap that we see with the number of drugs that are going off patent is Dr. Reddy's and Aurobindo Pharma.
I just want to point out that, Teva had also mentioned in their Q4 numbers this time round that they're exiting some of the drugs that they find too fiercely competitive.
Are they talking about exiting like the US generic market and only focusing on specialty?
So, for example, if there
it's almost 1/3 of their product profile that they're exiting. So that is the extent of the opportunity of Teva that comes up for grabs. So I totally buy your...
Can you look at it on another point of view and say, well, if Teva can't do it, are we really saying that some of the other guys will be able to? I mean,
no,
fight and
Teva
compete?
is doing it because the pricing doesn't make sense for them.
Exactly.
I don't think the Indian guys have that issue because our prices have already eroded, like I was saying, to abysmal levels. And it's not like Indian manufacturers have not sold at a discount to, I mean, Natco is a classic case. You know, one of their drugs, one of the biggest blockbuster drugs was selling at a fraction of a cost of what was being sold in the United States. So
cost of production still is a huge
I think so. And I think barring Aurobindo, which is just at about 3.5–4% of sales in terms of R&D, I think the Indian companies by and large are between 8 and 12%. So I think a lot of these ANDAs that have been filed, I think if you just put it into perspective, a lot of the earnings that are being projected for FY19, had these issues not happened, which is, you know, pricing of caps in India itself, where you went after generics, and then, of course, the US FDA issues, about 70–75% of these earnings might actually have come through in FY17, not even 18. That is the extent of the last 2 years' damage that's actually happened. So you're just, it's a reversion to mean, and then you're talking about incremental growth. And then comes the very important point that you raised about institutional ownership, and which is what we saw in the case of HUL versus ITC, for example. People were massively overweight on ITC, and then the sudden rally that you saw 40% in HUL because the numbers were far, you know, better. So that's the technical factor that will go into playing on this entire bottom formation process that I was talking about. Therefore, in the pecking order of what we have just discussed, I would probably place Dr. Reddy's at number 1, probably an Aurobindo at number 2, and Cipla at number 3 in our order of large cap pecking order in pharma.
And I just want to mention that a lot of the companies, it depends on your portfolio entirely in the US. Like Taro has a dermatology portfolio, much more competition than, say, Cadila, which is saying that they're not expecting that much price pressure. Taro is saying they are expecting price pressure. It depends entirely on your portfolio and other people entering the market. But Rahul, before we let you go, the urban consumption theme, we have the World Cup which is on. Just add in which team you're supporting and tell us how big an opportunity FY19 with all these little incremental anecdotal triggers are for, say, a Jubilant FoodWorks.
Well, I don't know if they've officially tied up with FIFA per se, so I don't know, because I know that...
We're assuming people are going to eat a lot of pizzas while watching those matches.
It's possible because, you know, the timing works just right for us, and, you know, of course, you have the big one kicking off with Portugal and Spain tonight. But I just think seeing the game last night, I think this is probably the first time in 30 years Russia will probably make it to the round of 32, given the way they just hammered Saudi Arabia yesterday and 2 of those goals coming in extra time. But my sense is there's too much riding. I mean, let's go with one of our developing country peers, and I'd probably say Brazil this time around. Let's see how it goes. But specifically on Jubilant FoodWorks, I mean, it's just been a dream run for that stock. You know, I don't know how many $3 billion market cap stocks have gone up 200% in a year. Our price target is about 18–20% higher from here. It's a very liquid name. It's an F&O name. But I think a lot of the base effect will kick in as the second half of the year wears out. So I think even if you discount 2–3 years out, I probably don't see the stock giving you more than 25% from here. So if that's the kind of return you want to play for, which is not bad, it'll still beat you an FD return by more than 4x. I think you could still look at it. But I think we're probably nearing the last leg of this incremental rally that we've seen in Jubilant FoodWorks.
Rahul, it's a pleasure. Thank you very much for joining in and taking us through Pharma, a bit more detail, and of course the call on Jubilant. We take a very quick break here. We come